All right, so today we have the pleasure of Jordi Brink joining us, founder of Daily Green Forex. Thank you.
Nice to be here. Thanks for the invite.
Thanks. Absolutely. Thanks for joining us. So I guess let's start with, a bit about your background, maybe.
Sure, like you said, Jordi Brink, CEO of Daily Green Forex and Daily Green Fund. Basically, we have two companies. On one side, we are a hedge fund that is focused on FX trading. And on the other side, we have a trading firm that basically teaches starting traders to build professional trading careers in the FX space. And at the essence of this whole organization is an unstoppable passion for trading, of course. So for us, the weekends are no fun. We are happy when Monday rolls around and the market opens, and we can look for opportunities in the market. And I've been working with Scandinavian as well. I think we'll talk about that in this podcast. But thanks for the invite, and fire away with the questions.
Absolutely. So I guess what inspired you to come into the space, to the trading space?
That's a good one. So I started trading in my college time. I always had the belief that trading was for rich people, and back then I was a broke college student, so I had the interest for it, but I never really pursued it until one of my fellow college students showed me that you can basically get started with trading if you open a brokerage account. So instead of studying for my exams one night, I opened a broker account, deposited maybe 100 euros, got some sign-up bonus as well.
Right.
And I started trading. I believe it was plus 500 back then. Mm-hmm. So, definitely a rookie, right? So I didn't know what was what, but I just took one of the charts, I put in a long position, and fortunately for me, I was up. I was in profit. So I had a good first experience. The week after that, I lost all my money, but the seed was planted.
You blew the account?
I blew the account, of course. Yeah, of course. But the seed was planted, like for me to see the power of trading, right? To make money from your laptop. It planted the seed for me to want to become a professional at it. Now, it took me some years, a lot of ups and downs, few more blown accounts, of course. Mm. But it started the journey for me. And I think now it's 10 years ago that I took that first trade. So for myself, I've come full circle. I've seen the ups, the downs, the good, the bad, and now basically run a trading firm and since recently a full-fledged hedge fund. So that's
beautiful.
For me, a nice milestone, yeah.
Beautiful. And I guess what strategy did you deploy when you started trading?
When I first started trading...
and then obviously during the sort of client journey.
So basically, I started out as all the traders, right? You go to YouTube, you search for...
baby pips, maybe.
Yeah, baby pips. I've seen them as well, of course. So back then, you try everything you can get your hands on, and you'll notice that 99% of it doesn't work, right? And you're stuck in this cycle where you hop from strategy to strategy. It's what I now call the struggling trader's phase. It's where most of the traders are, right? You deposit at a broker, you try a new strategy you have from YouTube, or you're in a signal service group or whatever, and you keep banging against this wall. Until for me, when it all changed is when I found the right mentors with good strategies. I took what they taught me, perfected it for myself, improved upon it. And now, personally, I'm more of an intraday trader. But inside of the firm, we also have a good swing trading strategy and swing traders.
Interesting. Yeah. Did you ever have sort of a eureka moment when you were like, aha, this actually works, you know?
Yeah, of course.
Or I guess you had a few of them.
Yeah, a few, of course. So basically, when I had the full mix down for myself and I started to see that I was no longer decreasing my balance, but now it was slowly increasing, that was for me the first moment like, hey, I'm profitable now. And it was still small, but in a sense also major, right? It's the first time you transition from being consistently losing to now starting to become profitable. I think that's the first moment, or let's say the second eureka moment. The first one was that first trade that planted the seed, the passion with me.
Mm-hmm. Right. And is it that's when I guess you started sort of the company as well, or was that sort
No,
of
that was later. So after I became profitable, I had a lot of people around me that were like, "Hey, what you're doing, I want to learn that as well." So I'm from the Netherlands. I rented a small office, and initially the idea was to just build a small office with a couple of my friends, and just spend our days trading. Right? That's when the company started. But it quickly grew. I believe in 3.5 years, we became one of the biggest trading firms in the Netherlands
wow?
that opens their doors for starting traders.
So initially it was more sort of a prop fund, or was it more of a sort of hedge fund when you guys sort of started?
No, it was more of a proprietary trading fund,
Okay.
a firm, but we were not giving out prop funds like a regular prop firm, right? So you were trading with your own funds. Later on, we partnered with prop firms to get more capital under our belt and basically help traders to get funded.
Interesting, interesting. So I guess talk a bit about sort of how you assess your traders when they come in sort of from A to Z. What are you guys sort of looking for in terms of, their capabilities, so to speak?
Yeah. So basically, we have two different types of traders that apply with us. So on one side, we have the complete beginners. Well, we'll just have to get them through the educational course to see what type of trader they are. And on the other side, we have the more experienced traders. So the more experienced ones, they probably have a track record, right? They have something to show for. So that's what we look at. Purely result based. And the beginning traders, we just have them go through the different phases that we have in the course. So it consists of 5 phases. First is knowledge. The second one is trading in a simulator, building your skill. Third one is on a demo account. Then we'll transition from demo to getting them funded with different funding partners. And then from there, phase 5 is scaling. And in each of those 5 phases, we have different criteria we look at, of course. So it's the strategy itself. Are you more a day trader or are you more a swing trader, right? Do you have the patience to let a trade play out for 3 days? Or are you a little bit impatient? Like me, I like intraday. I like intra-session.
You like the action,
Yeah, I like the action. And for example, our head of trading, Ben, he is very patient, and he can watch the trade play out for 3 days. I like it a little bit faster. I like London session to see my trade go in and go out, take my profit for the day, and that's it. So that's what we look at. We try to see what type of trader are you, what type of person are you. Are you disciplined and patient enough to be a swing trader, or are you more a fast action type of trader intraday?
Interesting. And I guess in your experience, what are the key qualities of a successful trader according to, your experience assessing these traders?
Key qualities, definitely discipline. And you need to control your emotions as well, positive and negative. So a lot of traders or starting traders, they fall for the fast success trap, right? The overnight success. That's not what trading is about. It's a little bit created because of all the Instagram gurus, YouTube gurus that show the huge results overnight. But that's not how trading works. It's more, you need to be disciplined enough to put some months, maybe even years into your craft, build yourself up. And even when you don't have the results, just stay disciplined. I think that's the number one trait. Trait of a character trait of a good trader. And I think second is emotions as well. So you need to control your emotions when you're in drawdown, when you're in a losing streak, because it's going to happen. Everybody is going to have a losing streak. And you need to control it as well when you're in your winning streak, because you don't want to over leverage, you don't want to overstep, and you want to take each trade as it comes. That's mainly the two biggest things, I think.
Right. Yeah. And what are the qualities, I guess, of a bad trader? That would be the opposite of that, essentially.
100%, yeah. Wanting the fast success, chasing the trade, being undisciplined, over leveraging, asking the broker for a 1 to 3,000 leverage, stuff like that. Wanting to make the fast money. And I get the mindset, because it's portrayed by a lot of people in the space, of course. But funny enough, if you just steer away from that and focus on consistency and disciplined trading, that's actually the fast track to success,
Right,
in my opinion.
right. So I guess in terms of your strategy, where have you sort of seen most success in which sort of instruments? Are there any sort of specific pairs that you trade that you've found success in? Maybe perhaps cryptos, commodities, stocks, et cetera, et cetera. What is sort
Yeah.
of the best trading universe, if you will?
Yeah, I believe that any asset class you can make money, of course, right? But you just have to find your favorite, which suits you the best, and stick with it as well. So for me personally, I like Euro USD. Low spreads, high liquidity, and you can get in and out whenever you want. And if you master a pair, you start to really get to know its movements and stuff. But we have traders in the firm that trade all currency pairs. So in general, we focus on 28 of them, right? The major and the minors. But if you like, you can trade crypto as well, or indices. I think it's more about finding what suits you the best and try to master it. Try to master one or two or three instead of chasing everything. That's in my experience what works best.
Interesting. So you would say euro dollar is the most sort of successful pair that you've
For me, yeah, for sure. And in the fund as well. So in the hedge fund, we work with algorithms first with human oversight, and the majority of our trades are in Euro USD.
Interesting. So in your experience, what is the sort of obviously there's always this debate about human manual trading versus algorithmic trading. What are, I guess, the sort of pros and cons of each sort of trading methodology, if you will?
Yeah, so a pro of algorithmic trading, which we use for the hedge fund, is that it's a lot safer. It's a lot safer, and investors like it more than betting on a human trader, because a human has the human traits, right? You have bad days and good days. And you can overstep on your rules if you're undisciplined. And an algorithm, it does exactly what it's been written, right? So it doesn't overstep its leverage or risk if you put it into the algorithm. But the returns are also lower.
In algorithmic
Trading. For us, it is. So it's a lot safer. We build all these risk layers into it, but it translates also to the upside. Right, so our algorithm, it does around 2% per month, 24% per year.
Wow,
that's nice. That's good,
decent, yeah.
And investors like it as well. To add to that, if you go to investors and you say, hey, we can do 60, 70, 80% per year with our algorithm, they'll probably shy away from it. Right? It's too much,
too high risk, right?
Exactly. But a manual trader, the pros of a manual trader is that if you have the discipline and you know how to manage risk, you can do 2% in a week.
Wow. Okay.
2% in 2 weeks. Because you have a little bit more of this freedom, right? An algorithm has more rules to it. So a manual trader who knows how to manage risk can do more in terms of the upside if you manage the downside good as well.
Right.
So some of our traders, they do 2% a week, 2% a session. I do not see our algorithm do that because it's not designed to do it as well.
Right. So is it sort of deployed 50-50 currently, or is it kind of like 80-20, or how do you sort of deploy the capital?
Yeah, so for Daily Green Fund, it's fully algorithmic with human oversight. So the traders are basically just watching the algorithm do its work and step in whenever needed. For Daily Green Forex, all of the traders that we have there, they're fully manual.
Obviously, there's a lot of talk about AI these days, as you know. Is there in any shape or form that you sort of incorporate AI in your algorithmic trading, for an example?
Not really. We have machine learning. So it adjusts certain parameters according to market conditions. So for example, average true range, if it changes some of the parameters in the algorithm. But we do not have AI into our algorithm. We have not developed it that far. AI is a whole different realm, of course. Something we could do, which is more easy, is we could have AI scour the internet, for example, to pull news reports and to give it to us in summaries, right? So we could watch news releases more easily with AI, but we have not an AI trading for us just yet. Maybe in the future.
Okay, interesting. So obviously, this space, the funded trader space, has gone through a lot of regulatory scrutiny, as you probably know. I guess, how do you see the space or the market evolving, sort of moving forward? I guess, what challenge do you see, like, within the market? I guess in the next year, 2 years, 5 years, et cetera, et cetera.
For the prop space, you mean?
Yeah.
Yeah. So the thing is, we've seen some crackdown on some of the prop firms. I think it's good as well because some of them were playing against the trader, and I think for regulation to come out or for some of these to be more regulated, it's a good thing for the trader and ultimately for the trading space as well. So if you find a good prop firm that books his clients or a portion of his clients, does some internalized hedging or has another strategy to make sure that there's enough liquidity to pay out profitable traders, I think that's a very good concept because it's a springboard for starting traders. I believe that you need at least $100,000 to make good money from trading. Right, so if you do a 2 to 3 to 4 to 5% per month on $100,000, that's enough for most people to pay their bills. So that's, let's say, base level. But most starting traders starting out, just like me, they do not have $100,000. Right, you start with a €1,000 account or a €5,000 account, and if you can skip that phase and go from 0 to 100K. And you have a good partner in the prop firm space that actually pays you out when you make profit, that's huge. So it's a good thing that there's more regulation and there's more crackdown coming into the space because it will force the bad ones out and the good ones will stay.
So how do you navigate, like your firm, how do you navigate these new changes in the environment?
Yeah, so for Daily Green Forex, we do not fund the traders ourselves, right? So we find good partners that take the liquidity risk. So it's more a conversation with the prop firms, with the funding partners. How are you paying out these traders? And can these traders be sure that you're the right partner for them to partner up with? And luckily, there are so many providers in the space that deals like that are possible.
So let's say if I'm a new sort of trader in the space, what are the key components I should be looking for, like, I guess, in a funded trader program?
I think the transparency at this moment lacks a little bit. So it's hard.
Because it's not regulated?
Because it's not regulated,
okay.
Yeah. And I think it's hard for a single solo trader right now to see which prop firm is good and which one is bad.
Okay. And how do you sort of assess that, the good ones from the bad ones, for example?
Well, for us as a firm, what we have in advantage is that we have, let's say, 100, 200, 300 traders that we can showcase to a prop firm and also make deals, right? We can lay down the rules and go in conversation with them. We can open the door like, hey, we have these traders. Do you want a partnership? And we need to make sure that these traders who will be able to do 2 or 3 or 4%, they won't do a 30% in a month because they're disciplined, and they won't lose a 30% in a month because they're disciplined. How can we work out a model where we make sure that they get paid out?
And how do you ensure that your traders become sort of profitable in your firm? How do you sort of help them in order to achieve their goals and objectives?
It's training and education, of course. So the 5 phases that I mentioned before, we have them go through that. First, you need to figure out what type of trader you are, swing or day trading. Then we teach them a profitable strategy. So for example, the strategy that I like, we call it London intervals. So we trade London Open, so pre-London and London Open, with a very specific set of rules. And for us, we do a live stream 5 days a week.
Oh wow.
So
Okay.
we trade it live in front
Interesting.
of all the traders.
Hmm.
And let's
That's a
say
lot of transparency.
that's a lot of as transparent as it
Exactly.
gets.
As it
Yeah.
gets. Yeah.
So you see when we lose, you'll see it, and when we win, you'll see it as well.
Mm.
And we call out the trade beforehand. So we're literally like, hey, we see this. It matches our criteria. Now we go into the trade, and a beginner trader will follow along, and a more advanced trader can make its own decision. Like, hey, I'm gonna wait until this gets broken or this
Right.
level gets swept. So how do we ensure people become successful? Well, we take them by the hand, literally.
Hmm.
But there's a huge portion that they need to do themselves as well. They need to backtest
A lot of homework.
a lot of homework. So we're not gonna do it for you. We're gonna do it with you.
Right.
Yeah.
Right. And when you obviously call out the trades, like what's been sort of your success rate so far in terms of, your live trades, for an example?
Yeah. So we started to do the live streams early this year, January. We haven't had a red week so far,
Wow.
so that's good. It's gonna happen, of course. We've had red days, but people that would have followed all the days of the live stream and took all the trades, they would have been green. So that's good. In the fund, algorithmically, we have around 72% win rate
Wow.
in over a
That's pretty
2-year
high.
span. Yeah.
One of the key challenges that a lot of traders face is changing market dynamics or market climate, for an example. So, usually you have a trader, swing trader, does phenomenally well in trending market conditions, for an example. And then you have sort of a ranging trader that does very well in ranging markets. But when the market dynamic changes, then typically they don't really perform either. So how do you sort of help your traders navigate those type of situations?
Yeah, that's a tricky question.
Because it always evolves, right?
It does evolve. Yeah, it does evolve. I think I can only comment on the London interval strategy on that because I traded personally. So you have some days where there's the moves happening that you're looking for, and there's some days that they won't happen, and you need to adjust. You need to adjust your strategy a little bit. But personally, I see that it's very consistent. So for the swing traders, you have periods where there's less moves in the market. And I think you need to wait out those periods a little bit until you see what you really want to see. It's better to sometimes just sit on your hands and don't trade
Okay.
and wait for the right market conditions than to chase it and go in.
And how would you do that, so to speak? You're just like, if you get a setup, you don't take it unless all the indicators are sort of showing green, or like, how would that look like?
Yeah, so we don't use indicators, but I get your point. So if you're a disciplined trader, you need to stick to your checklist. It's like a pilot trying to take off with the plane. They'll go through a checklist before the plane takes off. And if one thing on the checklist is not valid, the plane doesn't get off the ground, right? Because it's too risky. We might crash. I think you need to have the same mental approach as a trader. So if market conditions change and things on your checklist do not check out, just sit on your hands, don't take the trade. And if it then still plays out, that's the most annoying thing. That's the most annoying thing ever. But you then also need to find the self-discipline to reward yourself, like, hey, I stuck with my plan. Because if you take, and the opposite is true as well. So if everything is valid on your list, you take the trade and it's a stop loss, then it's not your fault. That's what we teach our traders as well. It's not your fault. You're gonna have losses.
Right.
It's not 100% guarantee that if everything is valid, you're gonna have a profitable trade. So in my opinion, if you have a proven checklist and you stick to it and consistently over a long period of time, you'll win. Okay. Even if market conditions change, if they're not in your favor, let's say for a month and a half, it will come back.
Right. That's very interesting. So how would you say, sort of, how long does it normally take from a newbie trader normally to be sort of become somewhat successful, in your opinion? You know, are we talking a couple of months? Is it at least one or year, 2 years, et cetera, et cetera? Like, how does that play out?
Yeah, so it depends really on the person,
Okay,
of course.
of course.
And we've tried to push this limit. So there's a documentary on YouTube. It's called The Next Top Trader. It's from us. And we put out a challenge. And we said, okay, let's take 12 completely starting traders. We'll try to train them in 3 months, in 90 days, and get them funded with $100,000 in capital. So we really try to push the boundaries here, because 90 days to go from beginner, not knowing what is an uptrend, a downtrend, to becoming funded with 100K is,
so it's kind of like a boot camp, basically.
Yeah, it is.
Right? Like a crash course in trading, effectively.
And that's the fastest we have pushed it so far. And it's fun to watch because not all 12 will make it, of course.
So they usually start off with 12 candidates?
In this documentary, we did, yeah.
Okay.
But normally we have different groups.
Okay.
But this one was just a challenge to ourselves. Like, hey, can we push the boundaries and do it in front of the whole world, record it, publish it, and if we fail, we fail, and if we succeed, we succeed. It's fun to watch. But normally, the normal route, it takes 12 months to a year and a half for a trader to really become independently good. And I say independently, like you no longer need us or a live stream or a mentor or a coach to tell you like, hey, go in, go out. And some do it in 6 months or 7 months.
Right.
And for us, the first major milestone is to become funded with 100K. So then you're like, okay, you're now a funded trader. You're not yet there. You're not yet a professional trader, but you're funded. You have demonstrated that you can manage capital profitably. Now it's all about honing that skill and scaling it.
Right.
And we have guys that have grown to 300K in 2 years.
Wow.
That's pretty good.
That's awesome. Yeah.
Then you're also pretty fast,
Yeah.
in my opinion.
Yeah. And what do you sort of do with those successful traders then? Because obviously that's, good human capital, right? Do you deploy your own money to them, or do you sort of, have some sort of partnership with them, or how does that look?
Yeah, so we have with our traders, we have a kickback agreement. So that's how we make our money as well, right? So our trader gets a profit split, we get a small portion of it, and the investor, the one that's providing the capital as well. In terms of a prop firm, if they work with a prop firm, then the liquidity risk is with them. For the hedge fund, we definitely want to deploy our traders there as well in the future. Right now, we're in the process of enrolling that, of rolling that out. And then it will be our investors, mainly professional investors or institutional investors that invest into the hedge fund. They will provide the liquidity risk.
Right. Interesting. So I guess we talked a bit about the funded trader space. What are the sort of key challenges or pleasures of working with a hedge fund, for an example? Obviously, it's a very competitive sort of market. What are the sort of key challenges that you've been facing growing your own sort of hedge fund?
Yeah, so we started our foundation for the hedge fund. It's in September 2022.
Okay.
So we wanted to build our live track record in order to raise capital, of course. So September 2022, we started with our live track record until the start of 2024. And our first full year was 2023.
Okay.
So we closed the year with 24.2% in returns. Maximum drawdown was minus 4.3%.
Okay.
So the risk to reward is good there. And worst month was minus 0.5%.
Okay.
And average was 2% plus. So those were the numbers we're aiming for as well. And now we have our license in Luxembourg. So we're licensed hedge fund in Luxembourg, alternative investment fund. And we're raising capital from investors. So we're now in the initial raising phase. So far, no big obstacles just yet. Just making sure that everything is done correctly. I think the most important thing in starting a hedge fund is the partners that you work with. So for example, a professional investor that's looking to invest $500,000 or $1 million, they do not want to send their money to a shady island somewhere.
Of course.
Right? To the Cayman Islands or whatever.
Yeah.
So I think the biggest obstacle is how do you get a tier 1 bank to partner up with a starting hedge fund. So
Okay.
our partner is Citibank, our custodian bank,
Okay.
because we leverage some partners that I have in my network. But that was the main obstacle. Like, how do you have your regulation in a good country as Luxembourg,
Right.
instead of the Saint Grenadines, Vincent Islands, you
Cayman
name it.
Islands or something like that.
Exactly. Yeah. So that's it.
Interesting. How's your experience been? Obviously, you told me you've moved to Dubai a couple of years ago. What has sort of been your experience working in this industry in a place like Dubai, for an example, compared to, the Netherlands or Europe?
Yeah. So there are a lot of traders in Dubai, which is nice. There are also a lot of entrepreneurs in Dubai, and not necessarily traders, and a lot of people that work in the finance industry as well. So since we opened up our doors in Dubai, I believe our network grew a lot. There are also a lot of professional investors, family offices, you name it, in Dubai. So from an investor side of things, it has been a good decision. In terms
You
of
mean raising capital effectively? Okay.
yeah, exactly, and expanding our network and whatnot. But in terms of trading itself, it doesn't really matter because there are traders all over the world, right? So one challenge that we had is our location was physical, right, in the Netherlands. So we had people coming to the office to train with us to become traders at our firm. But after the documentary, we had a lot of people from the US, from Middle East, from wherever, parts of Europe,
Interesting.
reaching out to us saying, hey, we want to work with you guys as well. But they cannot come from the US to the Netherlands office every day, right?
Right.
So that was a challenge. So we built a platform, which is called the Virtual Trading Desk. And it looks a little bit like LinkedIn, but for traders. So
Okay.
we have an activity feed. You can post your trades. You can like, comment.
Wow.
You have your own profile, whatnot.
Interesting.
So I think that was a good step as well. Even better than opening up our doors in Dubai, because building that platform opens up the doors to everyone, no matter where you are in the world.
Interesting. In terms of your hedge fund, what sort of instruments do you normally trade on? Is it sort of just FX, or is it sort of commodities as well, or cryptos, or is it sort of a mixed bag of everything?
Yeah, so our license, our prospectus allows us to trade indices and commodities, gold and silver, and FX.
Okay.
But we are FX focused. 80-90% of the mix is FX. And mainly the major and minor currencies.
Okay.
So
No exotics, or is it just sort of
no
the major?
exotics. No,
Okay.
it's the majors and the minors. So AUD USD, Euro USD, USD CAD, NZD USD, you name it.
And is there a reason why, obviously, you chose sort of Forex, as a hedge fund? Because obviously, there's a lot of stock trading hedge funds out there. Other specifically the niche of FX is. Do you have sort of a bigger success rate in the FX markets comparatively to other markets, or what's the sort of reason that 90% of your trades is just in FX, so to speak?
Yeah, good question. So our algorithm is designed also to trade indices or gold. So it works perfectly fine there as well. But it's more of a strategic position, because we want to be an addition to an investor's portfolio. We want to be an alternative investment fund.
Okay.
Right? So most investors, they already have, let's say, stocks included, indices included into their portfolio, real estate included into their portfolio. So what we do is we focus on a niche in the financial markets. We're very good at that niche because we focus only on that one thing. And it's uncorrelated to most of the other things in an investor's portfolio, right? So if the real estate market goes up or down, it doesn't matter for us, right? It's uncorrelated. So it's a good way for an investor to hedge out.
Kind of balance the portfolio, so to
exactly.
speak. Interesting.
Yeah. And let's say once we grew past a certain point, we'll open a separate fund or fund B which is more indices or stocks focused. But for now, we just want to focus on our niche. Yeah.
And how are your conversations with a lot of investors, given that obviously FX does not really have the best of names, has a bit of a bad reputation. How do you sort of overcome that conversation and sort of turn it positively instead?
It comes down to a little bit of education as well.
Okay.
So FX has a bad name because mainly because of the retail space, right?
Right.
But if you look at all the markets that's out there, FX is the biggest market by far, right? Our entire economy, our entire world economy drives on FX, on currencies, fiat currencies. So it's not uncommon for a fund or a bank or whatever to trade FX. It's not something new. It's not something flashy. It's not something highly volatile, let's say like crypto.
It's the backbone of the economy, essentially.
Exactly. Yeah. So if this would fall, we have bigger problems. We have bigger problems. So I think that instilling that, to plant that seed, to put investors at ease, like, hey, look, this is the biggest thing out there. And we just found a profitable niche inside of it. I think it puts them at ease.
Right. What's been your sort of, I guess, best versus worst trade in your hedge fund? Like, has there been any sort of moment where, you guys smashed the, park with, a 10% day or, 20% day or something like that? And I guess what's been the sort of opposite of that in terms of like a trade?
Yeah, to be honest, not really. Not really. We do not have huge great days, and we do not have huge losing days. It's very consistent, and that's basically what we designed it to be as well, and that's what we're aiming for. And I'm teaching that, or we are teaching that to our manual traders as well. You do not want to make 10% one trade and lose 10% in your other trade, because it will be very, very hard to find consistency. So it's better to have a good risk to reward and to risk not as much. So for example, you have a $100,000 account, just risk 250 euros per trade or 500 euros per trade, but make sure you have a 3 to 4 risk to reward.
Okay.
Right?
And basically insert your stop loss as well. Do you recommend your traders to always sort of trade with stop losses, or are they more sort of, free to kind of...
I would recommend a stop loss, but if you prefer not to trade with a stop loss, you should always have an invalidation point. Right? You should always have either mentally or physically a hard stop of like, hey, at this point, I'm going to get out of the trade. And you need to have it before you go into the trade. Because otherwise, how are you going to calculate your risk? How are you going to calculate your lot size if you do not know what's your invalidation point? How do you know what your return is going to be versus your risk? So it's very important. It's part of your checklist. And if you're not as confident, just risk less. It's always better to risk less and to see the trade play out your way and then be bumped out like, hey, why didn't I risk more? But that's always better than to feel sorry after you lost more than you can chew.
Right. Exactly. What's the most fun part of your job, or versus the most boring part of your job?
Oh man, the fun part. Well, learning new things, of course, for sure. Growing. Like I said, I started as all the retail traders out there in my bedroom. Placing that first trade at a broker that I just found on Google, and now running a hedge fund. So I've come for myself a long way, and we're just getting started, because in the hedge fund space, if you manage 100 million, you're still the smallest boy in the room.
Of course.
Right? So there are funds out there with billions under management. So for me, that right now is one of the most exciting things, like figuring out, hey, okay, we have a good foundation. How do we grow to that level? How do we get there? And the most exciting part about that as well is we're creating an ecosystem, a space for other starting traders to climb that ladder with us, right? So when I started out, there was no platform like we have, where you can go from a complete beginner to ultimately trading for a hedge fund. It does not exist. And for so far as I know, we're the first hedge fund out there that is opening its doors for complete beginners that still need to learn what is a pip, or what is an uptrend, what is a downtrend. And we're probably fast forward a few years, we're not going to be the only one anymore. But that's okay, because I think it's a good thing for the space if there are players out there that show the other side of the get money quick, get rich quick, the
Right.
Lambos, the Rolexes.
Right. Which is why it's sort of gotten a bit of a bad reputation, right?
Oh, 100%. Yeah. And in each facet of this industry, there are bad players and good players. So you have them in the education, but you have them in the prop firm space, you have them in the broker space, you have them in the whatnot, right?
You always have good and bad in
Yeah.
people, right?
Yeah.
So like what are the sort of key bets that you guys are looking at, key opportunities in terms of specific currency pairs, in terms of specific stocks, cryptos, or something like that?
Well, not really. Just I don't have a crypto right now to tell you like, hey, invest all your money right there. That's not
Well,
really.
Bitcoin's gone up pretty significantly, right?
Yeah,
You still think we'll hit the 100K mark this year, or?
I think we will. Let's say after the halving, maybe a little bit of consolidation, and then after that, hopefully a nice rally.
Okay.
Up until the end of the year, I think 100K is definitely achievable.
So you're definitely bullish on.
Oh
on
yeah.
Bitcoin.
Yeah, right now we experience a little bit of a dip, but that's okay. We had a nice rally, a little bit of a dip. Probably will go down a little bit more, and then let's see what happens after the halving. But for us,
the same thing with the other sort of cryptos as well, Ethereum, Solana.
Yeah, I think
pretty bullish.
Yeah, the altcoins they will join after Bitcoin rallies.
Right.
But for us, this is really speculative, and I have my own personal crypto portfolio, but this is not how we trade professionally. That's not how we trade in the firm or in the fund. For us, it's really like the consistent, the more predictable ones. Euro USD, my personal favorite, for example.
And it's not sort of long-term horizon, it's more sort of very short-term.
Oh, yeah. Yeah, it's short-term. Yeah, so it's either intraday or intra-week.
Okay.
Yeah.
Right. Amazing. Yeah, I guess to wrap things up, where do you guys sort of see yourself in, I guess, 5 years' time? If we have this interview in 5 years' time again, where do you want to see Jordi and Daily Green Forex?
Yeah, in 5 years from now, I hope that we've done another documentary. That's one thing on my list. Second one would be that the fund will cross 100 million AUM. That's definitely.
What are you guys at right now?
We're in initial raising phase. We're around 1 million.
Nice.
And we want to be at 10 million before the end of this year. Because the target is actually 100 million in 3 to 5 years. So let's see if we manage to do that. That's more of the fund side. And I have said once in an Instagram post that I would like to create 1,000 funded traders.
Wow.
So I think we're at 100 plus something. So we have a long way to go. But let's say in 5 years, we've created that 1,000 funded traders, maybe with Nordic Funder or with another prop firm. But I think those are our three good goals. So the documentary, the fund, and 1,000 funded traders.
Amazing. Awesome. Well, good luck, and thank you so much for coming. It's been a pleasure.
Man. It was a pleasure. Thanks for the invite.
Thank you so much. Thanks.